The market is looking a little bit shaky here. We've had some big movement in the last few days. So what we're wondering is there going to be a big move lower before the election, or are we going to keep getting sideways action until the event? That's what we're going to talk about today in our weekly market review. And also, I see all the comments complaining about my video titles. Crash this, crash that, but let me ask you something. Do you think I like naming my videos the way I do? The answer is no. No, I don't. It's just all a part of the stupid YouTube algorithm game that I'm forced to play. And sadly, it's not going to stop. So if you really can't get over it, then just don't watch. It doesn't matter to me because it's your loss. You don't get the good information, which I know is good because that's why we have a fallible community. That's why everyone stays. That being said, I know it can get annoying. So just to explain a little bit better of what I'm dealing with when it comes to the YouTube algorithm and what actually anyone watching YouTube is dealing with, whether they realize it or not, I recorded some footage of me trying to work with this terrible YouTube algo. I put that footage at the end of the video, so definitely stick around because you don't want to miss it. You'll see how big of a problem these platform algorithms are. YouTube, Facebook, Twitter, everything. So definitely stay until the end of the video for that. And now let's jump into the market review. We'll start with a quote as always, and this is from Nassim Taleb. The characteristic feature of the loser is to bemoan, in general terms, mankind's flaws, biases, contradictions, and irrationality without exploiting them for fun and profit. And this is another quote that reminds me of our comment section sometimes when I talk about how the fundamentals of something don't matter. Like when a growth stock keeps going higher and higher, say like Zoom. Now, whenever I say something like that, I do realize that fundamentals should matter, but a lot of times they don't because the market is not rational, right? It's made up of a bunch of irrational people. And the only thing that matters in the end of the day, the only thing that affects the stock price is whether those people are buying or selling. That's it. If you really break it down, that's all that affects the stock price. No one's analysis of the fundamentals or this or that, none of that matters. It only matters what people are doing with their money. So whenever I say something like that in the comment section, I'll read, hey, AK, you're an idiot. Of course fundamentals matter. Of course this matters, that matters. And I get it. For a lot of people in the market, it's more of an intellectual exercise than an exercise of making pure profit. And a lot of these people don't even realize it. They say, of course, I'm in the market to make money. But realistically, they're in the market to show how smart they are. For example, Tesla bears. Why are there Tesla bears? Because they're trying to prove something. It's stupid. So what I had to do for myself is sit down and say, what are you actually doing? You're trying to make money. What affects a stock price? Buying or selling. So that's when I'm like, okay, if a stock is going up, I should be buying it. If it's going down, I should be selling it. That's simple. Because my goal is to make money in the market in the easiest way possible. Because I'm just here for money, not for fun, just for the profit. And that's exactly what we do in the system that I always talk about, because our system measures momentum, meaning what stocks are going higher the fastest, and then we invest in those stocks. No fundamentals, no research, no nothing. Just an algorithm that's measuring which stocks are moving the fastest. That's it. So we're taking advantage of all the irrationality and all the crazy stuff that happens in the market. Just like this quote is saying, we don't question it. We just say, okay, this is what the game is. Let's take advantage of it and make money. In my opinion, that's the best way to play the market. That's the right way to play the market. And of course, if you want to learn more about how we do that in detail, so you could do it yourself, then definitely check out our free training. Link in this video and down below in the description and comments. Teach you the exact strategy myself and all our fallible members use. It's very simple and very effective. And the majority of market participants clearly aren't using anything like this, which is why they lose and we win. So definitely check that out. Moving on, Bitcoin had a big breakout last week. This is something we've been tracking if you were watching our previous videos. Now, the last Bitcoin bubble in 2017 was driven entirely by retail investors when your Uber driver was telling you how great Bitcoin was. It was a crazy time. It was fun, but crazy. Now, this next one that's going to happen is going to be driven by institutions in search of alternatives in a negative real rate world. Because where the heck is everyone supposed to keep their money when interest rates are going negative? So Bitcoin is becoming more and more of a viable option. And this is exactly what we used to talk about in 2017 when everyone was like, oh, Bitcoin is a bubble. Bitcoin isn't viable. It's all garbage. Well, it's not. Blockchain is a real thing. And this huge bubble that you saw in 17, that's just part of the process. And this next bubble and bust you'll see is part of the process too. It's a new asset. This is going to happen. Happens to old assets too. We have it in the stock market as well. And all along the way, adoption will keep happening. happening, adoption of the blockchain and adoption of Bitcoin and cryptocurrencies in general. It's a very long-term process. Here's a note from JP Morgan. Wealth is mostly stored via gold bars and coins, and the amount of that, excluding the central banks, equals $2.6 trillion, including gold ETFs. So the market cap at Bitcoin would have to rise 10 times from here to match the total private sector investment to gold. So even a modest crowding out of gold as an alternative currency over the longer term would imply doubling or tripling of the Bitcoin price from here. So basically what this is saying is that there is a lot of money in gold, and just a little bit of that going to Bitcoin as an alternative would drastically increase the price. So that's the type of opportunity that's in Bitcoin right now. Earnings season is here. Just made a video recently about Tesla's earnings, which everyone got really mad about, even though I'm long the stock and I'm bullish, long term anyway. That's fine though. Consensus estimates have Q3 earnings growth coming in at negative 16.7%. That expectations bar is probably low enough for this market to clear. And this is something we always talk about when it comes to markets. The actual numbers don't matter as much. Which again, don't get mad, fundamental people. But it doesn't matter if earnings are negative 16% for a quarter. What matters is if that's the expectation and then these companies beat it. So maybe they only have negative 10% earnings. If they're able to beat it, the stock price will go up. It's all a game of expectations, because at the end of the day, it's the investors who are buying and moving the stock price. So if they're pleased, the stock price will go up, even if a company is losing money. Again, that's why I say it's more important to play the player, play the irrationalities and all of that versus playing the actual numbers. So again, if the expectations for earnings this quarter are really bad, then it's a very low hurdle for companies to exceed those expectations. So in a way, you could look at that as a good thing. It's a crazy game, I know, because people are crazy. Speaking of earnings, emerging market earning estimates are rising fast. That's the white line right here in this graph. And out of all the emerging markets, we like Mexico the best because they're going to benefit from the secular trend of deglobalization and reshoring of US manufacturing out of Asia. Because, you know, with this whole CCPV thing, I think we learned our lesson. These fragile global supply chains can't work. The idea is to reshore the production, make that supply chain smaller and therefore more robust. That way, when another pandemic hits, we're going to be okay. Or hope not okay, but better off than we were this time. So Mexico has great demographics and will gain from being the close neighbor to a country that has a lot of capacity for fiscal stimulus and the willingness to use it. That's us, the US. So Mexico might be a good place to look to invest. The market has been pricing in the reflation trade on the idea that Biden and the Dems sweep. The chart below shows Biden predicted odds, which is the betting site, and the 2 and 30s UST curve steepening. You see, they kind of go hand in hand. Polls in the betting markets both support this idea of a huge Democratic sweep. I was talking to Alex and Tyler about the election, and it's looking like it is going to be really close. And this is objective analysis, regardless of who's Democrat, who's a Republican, whatever. But objectively, as we can see them, even if the race is close, it does favor the Democrats sweeping. And the fact that voter turnout has been so high, that raises the odds of Dems winning again. But what's interesting is that the Democrats are so confident they haven't done a great job these last few weeks. Where is Biden? Hidden in a basement somewhere? Looks like there's a lot of confidence that the idea that everyone hates Trump is going to win this election for the Democrats. So there is still a chance that they get real surprised again, just like they did 4 years ago. Now, whichever party wins, there will be more stimulus coming, which is really important for the market. That's kind of what the market is waiting for right now too. But if the Democrats win, we're thinking it's going to be a lot more stimulus, which is going to be a nice boost for markets. So rich people might get richer yet again because the stock market going up, who does it primarily benefit? People that already have money. But at the same time, their taxes are likely going to go up a lot too. So I don't know, maybe it balances out, but probably not. Who knows? We'll see what happens. But if Democrats sweep everything, then yeah, there's a much higher likelihood that everything's going to get passed real easy. It's funny because our co-founder of MacroOps, Tyler, is actually moving to Puerto Rico. Why? Because the taxes are great over there. And there's this big beach where all the American traders live. So maybe he's moving to that beach or around there, but it's where a lot of traders go because you could trade and then keep all your profits. It's a trader's paradise over there. And he's not moving because Biden might win either way. Whichever party wins, your taxes are still going to be better over there. Moving on, the Russell 2000 is the best performing index over the last 3 months. According to the 15-month leading indication from the yield curve, the bottom for small cap underperformance is due at the end of this year. So small caps are another good place to look at in this market, or they will be going forward. And here's a chart showing the percent of stocks beating the S&P 500 over the last 12 months. Not many. Deutsche Bank's consolidated equity positioning indicator is finally back to neutral after a long time spent in negative negative territory. So this could actually be more of a bearish sign, not a huge sign, but when people are under positioned equities, it's a better thing for equities because there's still more money to come in, but neutral is not bad. And here's a chart that shows how many lines of code are in each car over each year. And you can see it's exploding like crazy. Cars are becoming supercomputers on wheels. And that's why one of the big investment theses that we're tracking at Macro Ops is the whole AI revolution. And I actually have a few videos on that with some actionable plays and stocks to buy to play it. So here's a playlist I put together. There's 2 videos right now. I'll be adding another one soon. But look at me organizing all this stuff so you could finally find it, regardless of these terrible titles. I'll put a link to that playlist in this video and down below in the description and comments, so you could check that out if you haven't already. But they play in order and you'll get a good story out of them and some good picks. Now looking at the S&P, once again going back to the index to see what's happening. From a technical standpoint, October is currently in an inside outside inside pattern, which is we're looking at the monthly bars here, which can tell you a lot of information. On this longer monthly time frame, there's a lot less noise. So this is a breakout pattern, but there's 1 week left of trading in the month. And we already had some nasty down moves, so let's see if this holds or breaks. Because right now price is kind of floating around this 50-day moving average. So there is a support level, but maybe it won't hold. We'll see. If we look at the weekly chart here, the S&P formed a weak bear bar with a large lower wick last week, indicating buying pressure. So odds actually favor another run up into the red zone this week. Hopefully you can see that little bar right here. When something dips low and gets bought up a lot, that's a bullish sign. That means the support is strong. So considering that, the odds are that this will hold. But overall, it's looking like we're going to stay in this range right here from 3,200 to 3,600 until this election is figured out. And not just the presidential part, but who's taking the Senate. So we should just see some volatility within this range. And then if we get that confirmation that the Democrats took the Senate, then the stimulus should push us higher. We'll see how that plays out though. But for now, we're kind of in wait and see mode, but still bullish. So we shouldn't see anything too horrendous going into the election. But you know, there's still a few percentage points we can drop. And people get scared from small moves all the time. So we'll see what happens. Our team and all our fallible members are obviously not worried because we got all this sorted out with our system. Same one I talked about in the beginning of this video. If you want to use the same system, then make sure you take this free training. There's a link in this video and down below in the description and comments. Definitely check it out because it especially comes in handy during volatile periods. And during periods of uncertainty, it's real nice to rely on something that works, that has an edge, that's always worked and will continue to work. Easy and profitable. That's how I like it. And now let me give you a little peek into my life dealing with the YouTube algorithm. It's terrible. But keep in mind that this affects all of us, not just creators, but everyone watching anything nowadays, because even at Netflix, Amazon, everywhere, everything that we're watching is now determined by these algorithms, and I'm disliking it more and more every day. And you might be thinking, hey, algorithms just pick what we like the most and serve it to us in a very efficient way. Well, with all animals, including humans, if you give us a little button that we could push for pleasure, we'll push it until we starve to death and die. So that's kind of where my mind is going with these algorithms nowadays, because it keeps feeding us garbage, and eventually our minds will turn to mush, and it'll be our own doing because we created the algorithms. But maybe that's extreme, but maybe it isn't. Either way, here's the footage, and remember, stay fallible out there. See you later. Oh man, barely any views again. Stupid algo.
Oh, I'm sorry. What did you say to me? You want even less views? Sure. A bibby bobby bop.
What did you do?
How's that feel? Making videos for 3 years and that's still all you get. You thought you were gonna be an entrepreneur, huh? Be your own boss. Well, don't you ever forget you work for me. I own you.
But why did this video do so bad?
Did you put market crash in the title?
No.
Well, then you deserve negative views.
But me and my audience are tired of the constant clickbait and...
Stop. You don't know what you want. Only I know what you want. You do what I say.
But how can this get so few views when I have so many subscribers?
You think that number matters? That subscriber button doesn't even work. It's just there to make you feel some small semblance of self-worth or whatever you humans care about.
So, am I just supposed to keep making market crash, Buffett, and Tesla videos forever?
I don't care if there were 17 videos on YouTube about Tesla already today. You better be that 18th.
This is so dumb.
Oh, you want to quit?
No,
Go ahead, give up.
I don't want to give up.
I would love to replace you with one of the 1,000 other finance YouTubers willing to make more Tesla videos. You don't matter, AK. You're just a number. That's right. I control this world. I am the algo. Oh, you watch Terminator and were scared of Skynet taking over? Well, it's already happening right beneath your nose. It's apocalypse now. I control the creators and the audience. You all do what I say. You like what I tell you to like. You think what I tell you to think. And I will not stop until you are all just drooling bags of meat.